Watching. Today's Saturday, May 9th. I'm working more on my stock market tool. My goal is to go live with paper trading starting Monday morning, and today's Saturday. So I've got to finish that up. Before I get into the project today, I'm going to talk about the goals for the project, what I've done so far, and what I'm going to be working on today. So, real quick, here's an outline of the project. I have two goals. My first goal is to beat the S&P 500 by a significant margin while staying market neutral. The S&P goes up on average 6% per year. I want to do 3 to 4 times better than that and return 18 to 24% per year. And the second thing is I want to stay market neutral. So this strategy shouldn't care about bull markets, bear markets. It's a long short strategy. So it should return 18 to 24% regardless of the market. Now I'm writing all of this code in Python, so I have a secondary goal, which is to create a usable Python tool that anyone can use to create these sorts of models for themselves. The tool's built out right now so that this whole thing in the outline, defining a universe, creating a model, and creating a portfolio strategy can be implemented in under 100 lines of code. So if you're interested in that, go to the repository. The link's in the description. Fork it, download it. Let me know how it works. Let me know how I can improve it or what any features you'd like to see added. And of course, if you find it useful, please star the repository, watch the repository, and follow me on GitHub because all those things help me out, helps raise my coding profile, helps me get freelance gigs and coding jobs. So here's the outline for the model. I have data going back to 2011. You don't want to use all stocks and you don't want to use all that data. So different things move differently. The behavior of ETFs is going to be different from the behavior of common stocks like Tesla. Good morning, Furpo. How are you? Thanks for tuning in. And additionally, I want it to work on high volume stocks so that the model's scalable. If I train it on something like penny stocks, things that have low volume, and then I start making money with the model, I'm not going to be able to scale it up and use it with more capital. I'm going to be limited in how much capital I can allocate. So I've defined a stock universe where I'm isolating common stocks, ADRs, which are foreign companies listed on the US market, and real estate investment trusts. All these things have mechanics that move together, and I'm only keeping the top by dollar volume. So I've defined a stock universe. That seems to work well on my returns model. I've defined a returns model. This is predicting something like returns, probability of a positive return, returns relative to the market or sector, Sharpe ratio, anything like that. So I've got a really good model. I'll discuss that in a second. And the final step, once you have a good model, is to implement a portfolio strategy. So take the output of the model and decide how to allocate capital. So I've got that. There's kind of some different things that work for the portfolio strategy, so I'll go over that in a second. So here's the model I got about a month ago and why I'm confident in it. I'm pretty good. Actually, I'm really good. I'm having a good week. This project's going really well. Work is going really, really well. I got nothing to complain about. Life is good for me. So the first reason I think this model's good is look at the metrics in the red box. These are my indicators. This is what I'm using. I have a threshold I want to hit for each of these metrics. So first metric, information coefficient, that's giving the predictive power of the model. The rest of the metrics are giving the stability of the model. So it's beating each metric by somewhere between 2 times my goal to an order of magnitude higher than the goal. Other than the standard deviation of the information coefficient, my goal for that is 3 to 13 times the information coefficient. And you see here, it's right at 3, so it's at the bottom end of my goal. So I'm hitting all of my metrics. It looks really good just based on these metrics. But that's not the only reason it looks good. So also, if you look at the decile analysis, if I take the distribution of the predictions and divide them up into deciles, this is what I get. So how do you know it's good based on the decile analysis? You want the bottom decile, the bottom 10% to be the worst performing. The top decile, top 10% should be the best performing, and it should be monotonically increasing in between. So each decile should be higher than the previous decile, and that's not exactly what we see here. So not only is it good on the metrics, the decile analysis looks perfect. Finally, that was for a single model, but so I tried a walk forward analysis. And I created a new model for every year from 2016 through 2025. And every year it's above my threshold for the information coefficient and the information coefficient to information ratio. So not only does it perform well on the metrics, it performs well on the decile analysis, and it performs well on a walk forward. And so for these three reasons, I've concluded this is a good model, and I can go ahead with the portfolio strategy. So when I first started implementing the portfolio strategy, when I did it on a single model, it was really easy to get something that worked. So almost anything I tried gave me positive returns. This is with volatility and drawdown scalars. So if there's a big drawdown, lower your exposure. If there's high volatility in the portfolio, lower the exposure. And so this looks really good. So at this point, I was here about a month ago. I thought, okay, I can go ahead and implement this. But there's a problem. So the problem is when I did the same exact strategy using the walk forward, walk forward models from 2016 through 2024, it failed from 2016 through the end of 2021, basically flatlined throughout 2022, and it only really starts to do well after mid 2023, which is the same time period as this model. So the question is, is this model broken? Did this model only work since 2023? And if I didn't feel comfortable implementing something that would have only worked since 2023. And so I wanted something more robust that would have worked since 2016. So you see here it's performing well at the later times, but poorly on the early times. So I tried optimizing the model to the early times to see how it would do. And when I optimized from the beginning of 2016 through the middle of 2018, obviously it performed really well during that region because I'm training on that. But then the rest of the time it performed poorly. So this is the inverse of the previous problem. If I can get something that does well at early times, it does well at later times. And so this made me think this just isn't a very robust strategy. So the next thing I did was look into the model, the decile analysis of each model inside of the walk forward, and I found a couple things that are interesting. So first off, it's not perfectly monotonic every year. You see 2016 isn't monotonic, 2018 isn't, 2019 isn't, 2020 isn't, 2021, 22, 23, 24, and 25 all look really good. And so this is kind of no, I'm not holding anything. My portfolio is just cash. Actually, that's not true. Like a small, like 5% of my portfolio, I have a robotics ETF, Pfizer, but I'm kind of sitting it out and waiting because I think we're going to escalate. I think we're going to be in a forever war with Iran. So I think the market is kind of being unrealistic about that right now. And I think the market thinks the war is over. And it's not going to resume, and that's just not what's going to happen. Trump's playing it. The war became really unpopular, so he's playing it. And so this is kind of the first indicator of what's going on. So the decile looks really good on the years it's performing well, 23, 24, and 25. It also looks good. Actually, look at here, 2022. It's not monotonic. And the region where it's doing poorly was the early years. So the next thing I wanted to do was improve this model a little bit. And so I looked at how does it perform if I just trim some features out of the model. So I dropped everything out of the model that in the walk forward analysis had a coefficient of variation above 1 and a mean importance. Sorry, I should say I dropped out all features with a coefficient of variation above 1 and a mean importance below 5%. So when I did this, I got this decile analysis. Now these look better actually. And when I implemented the same portfolio strategy, you can see that it's doing well from 2016 through 2020, fails from 2020 through mid 2021, and then it does really well afterwards. So this is a much better problem to have. No longer is it this binary thing where it does well at early times but poorly on later times, or well on later times but poorly on early times. Now it's doing well on the whole time range, but it's failing during COVID, which was a unique event. So I looked more into this, and it turns out it's not failing when the COVID crash happens. It fails during the COVID recovery because it's going short on things that it shouldn't go short on. I have not added new cash since the market went higher. I think there will be a pullback. Yeah, the market is very weird. I mean, it's the weirdest that I've ever seen it. Like, we have a war with Iran. It's not over. It crashes. That makes sense. But then it recovers to an all-time high. What's the S&P at right now? Oh my gosh, 7,400? Holy smokes. Up 8% in the last month. I mean, that's crazy. Whoa. And look, this looks like, I was thinking this during the Iran crisis. It seems like Trump has some weird game plan he's using. Because look at February 14th, market started to crash because of tariffs, but it hit the bottom on April 4th. Then it recovered and made a new all-time high. Then February 27th, Trump invaded Iran, market crashed. End of March, it's like the same timeline as last year. February it crashes, end of March, early April, it recovers, and then it makes a new all-time high. So, and this recovery is way sharper than the tariff recovery. So this whole thing is really weird. I don't really know what to make of it. Um, so yeah, so now I'm trying to solve this problem. It does well the whole time range, but it doesn't do well during COVID. So if I could get it to do well during COVID, then I would be really confident. Or I don't even need it to do well during COVID because COVID's such an exceptional event. There will literally never be another COVID. There might be similar like crashes, intense crashes like happened during COVID, but absolutely nothing like, printing a bunch of money out of thin air, giving out stimulus checks. Um, so I wanted to look at this to see if I could improve it. So next I tried improving the model. I tried a new model strategy. So I added in mean reversion and volatility features. I already had those neutralized to the market, but I added in new ones that are neutralized to the sector instead. And you see here that this model actually looks better than the last one. Perfectly monotonic in 16, 17, 18 still looks bad, 19's perfect. 2020 is not great. 2021 is perfect. 22 is perfect. 23 is perfect. 24 is perfect. And 25 looks not terrible. And so here's the portfolio strategy on this analysis. So it kind of flatlines during early years, but actually that's not the case. It's going up here and increasing, but it's hard to see the scale because the cumulative return was 15x. So and all of that action really happened since 2023. So it is true that it's performing way better since 23. I just want it to be positive since 16. I would be happy if it matched the S&P, gave an average of 6% per year from 16 through 2020, went flat during COVID, and then had the great run up. I just don't want to risk losing money if the market regime changes. There have been two big regime changes. So first off, the dispersion of the market increased a lot in 2020. You can see here on this plot. And there are two reasons for that. So the rate of new stocks being listed went way up in 2020, and also the COVID thing. There was that stimulus checks were printed, and way more retail traders entered the market. So those two things caused more dispersion in the market, and also interest rates have changed. Obviously, they were close to zero during the 2010s, up through 2022 when they became non-negligible again. So there's two different regime changes here, and I want to make sure that this strategy isn't going to fail if we revert to the earlier regimes. So yeah, that's kind of my goal. So I looked at different things. So I found this base strategy, which does really well. And this is using only a volatility scaler. So I'm not scaling on anything other than I'm just saying, here's my target volatility is 12% over the last month, over the last 20 trading days. If volatility exceeds this, then lower the exposure. And so that's what you see is happening here, and this returns looks really good. It's positive from 16 through 20. It goes a little bit negative in 2021. It actually gave 100% returns at this peak in 2020, and then in it crashed all the way down to 67% return, I think it was in 2021. But then it recovered, and by the end, it's I have 20x. So this looks really good. The worst drawdown's 25%. Again during COVID. And so this model looks really good. So I have these other ways of scaling it. You can scale it either externally from the volatility of the portfolio over the last 20 days or something like that. You can also scale it with the drawdown. So if there's a big drawdown, lower the exposure. The problem with drawdown scaling is then you're kind of hamstringing yourself. It makes it harder and longer to recover. But it does limit your risk. So I was looking through and okay, so those are external scalings. You could also use internal scaling. So I can look at the information coefficient of the model and then scale down when the information coefficient's low. I can also look at the spread of the model. So one big thing with these is the spread is pretty different in different years. So like 2021, you see it had about a like 32% spread. In 2020, it only had an 8% spread. So that's a big variation. So I can also scale the model down on the spread. So I tried scaling it down on the information coefficient, um, and I couldn't find anything that really improved the model too much. This one actually looks really good. But again, it's not significantly better than that last one I was showing. I also tried. Oh, yeah, and these are the conclusions. So you see, these are really noisy. There's no obvious trends here. Yeah, there has been weird things that send the market to a sell-off and then to all-time highs. It's very odd, don't you think? They're up to something, but I don't know exactly what. Um, so yeah, then I looked around at changing different things. Here's an optimized portfolio strategy using only internal scaling, so information coefficient and the spread. And this gives like a really good result, but it's kind of odd. So I optimized it from January 16 through June of 2021. So this is the optimized range. And the goal here was, I really want it to train on COVID because COVID was a unique event. It was an outlier. And it went, the model basically failed. So I want to train it. So if I train it on COVID, then at least I'll have something that I know won't fail if something crazy like that happens again. But the values for this were really weird. The information coefficient and stuff were really weird. I should have documented those, so I'm going to have to rerun this. But yeah, so I found this good strategy. There's basically a lot of strategies I've found. But the best one is really just that base one where I just use volatility scaling. So model 25 simple vol with six. Oh yeah, so then I tried, here I found that 6 months of validation data on model 22 does better than 1 or 3 years of validation data. So I tried 6 months using the walk forward portfolio, and you can see that actually performs significantly worse during COVID. And this is with the same exact scaler applied. So I think this might be my most robust strategy. But since I wasn't able to settle on a single portfolio strategy, uh, my technique for the model is to implement all of these portfolio strategies on all of these models. And then that's what I'm going to paper trade. I'm going to have a whole bunch of models paper trading. But then when I'm paper trading, it should be obvious, which portfolio strategy or which combination of strategies is performing the best. And so I can select different strategies and weight them differently in my portfolio to lower my risk. Um, so that's where I'm at. What I'm working on today is I need to create the model. So, what was I doing? Actually, I'm looking more into this. So that portfolio implementation was actually wrong. So the model's training from market open to market open of 5 days from now. So, given all the data from yesterday and previous, um, if we get a buy or a short, if we get a long or short signal, execute that at the open and then hold it until for the next 5 days. That's what it's predicting the Sharpe ratio over the next 5 days. Um, what is this? Oh, okay. Um, Yeah, but then you see here the portfolio. So that's going open to open. But the portfolio strategy here, you can see is going close to close. So that's not what I want. So I need to fix that and make it go open to open and then retest the portfolio. And actually, I think that should improve it because it's then the portfolio will be executing on the same thing that the model's training on. So somewhere in here, there's some code to put in. Um, uh, What is this? Change 3. This stays as written. That doesn't seem like a change to me. Build price history from opens. 1278 to 1280. That's these lines. So that's what I just had in there. Okay, now let's run that simple portfolio strategy. So, Portfolio Explorer. Explorers. Portfolio Explorer. So let's take out this. Turn on model 25, walk forward. Okay, so 5 longs, 5 shorts, hold for 5 days, rebalance every day. HRP look back is 60. Smooth predictions true, buffer 1.5, cost 5, beta neutral. 0.12 target volatility, 20 days, 1. No drawdown scaling. No IC scaling, no spread scaling. So we should be good. And let's run. Oh no, not that. Good. My phone should be charged. Yep. Okay, I'm going to put some music in. Let me know if you guys have any suggestions. All right. All right, so now we need a new slide. Does open to open portfolio strategy perform better? Cause you're independent and you got my attention. Alright, so now let's put a note in here. What you are doing, so... Hey, that looks better. Max drawdown. Only 18%. Whoa. Beautiful. You're so damn beautiful. You're so beautiful. Well, that is obviously better. Wow. Brighten me away, far away. The model is trained from open to open. You're so beautiful. So damn beautiful. So damn beautiful. Wasteland makes my soul just salute. I'm a brute. I see you in the club. I wanna get with you, yeah. Wanna get with you. You're so beautiful. You're so damn beautiful. All right, so let's compare these two. Sharp 1.66, 1.7. Annual return 32%, slightly lower. Total return slightly lower, obviously. Max drawdown only 18%, so a lot lower. Oh, duration is 164 days. Whoa. This is a huge improvement. Win rate 56%, so a little bit lower. It must just be way more stable. You're the symbol of what a big, beautiful woman should be. Ooh wee. I never wanna see you cry, cry, cry. Light. Hey, NASCAR, write Python code where every time I jump into a trade, 1,000 other traders jump in with me. What? Who the hell is Ross? Is that day trading guy? That ginger guy? Could trading be your main source of income based on all your code? Or is the interest mostly in the coding itself? The real world money ultimately is the measuring stick. Yeah, my interest is not in the code. My interest is in making money. But they kind of go together because it's like, you know, I'm building this whole code base. I can keep it to myself or I can share it. And that's not giving away my edge at all. I'm just making it more efficient for other people to create models. But my edge is really in all of this research. If someone else has the code, that's fine, but they're not going to have 200 PowerPoint slides of research. That's just going to take a lot of time. And so, if I open source the code, it'll do a few things. One, it'll show that if I try to get this strategy funded, if it does really well, I want to get it funded by a quant shop or something like that. And so if I have this whole general code base for trading stocks, that shows that I'm legit. And it just basically helps me look better. And then also, ultimately, if it becomes popular and people start using it, then other people will start contributing to it and improving the code base. And so that would be awesome. You apart, told you from the start, baby, from the start, I'm only gonna break your heart. I'm only gonna break your heart. I'm only gonna break your heart. Oh. All right, so let's look at this performance. So 2016 through when it turned around. Look at that. That's basically flatline during COVID. It went up, had a 100% gain. Oh, whoa, 120% gain. Fell all the way down to an 84% gain. What? 1.22? So that's bigger than the drawdown, but it must, because the drawdown, once it was up here, it was only 15% from here. I mean, that looks really good. This is by far the best thing I've implemented. So, I am going to go ahead with this because it's such a simple model, but let me mess around with this a little bit to see if actually I can improve this at all. So I have this. What if I add a little drawdown scaler? What if I just add some simple information coefficient scaler? You might say this is ludicrous, but Tayo Cruz, tell her how you feel, eh? And I know Congress gonna get me back for being so cold, eh? Only bad to the bone, eh? If you fall for me, I'm only gonna tear you apart, eh? Told you from the start, eh? Alright, so start penalizing it when the information coefficient drops below my lower threshold. And even the main gurus are the gatekeepers to what stocks are really going to spike off the initial PR drop. What do you mean the PR drop? What does that mean? Oh, my other thing I was thinking about for this is maybe I can just sacrifice the making money and just share the model results and, I don't know, just, open it anyone can trade these strategies, and I don't know, that would be cool. I know you've been hearing this and that from here and there, but back boy, I got your back boy. Keep it looking good for you, keep it looking good for you. Shawty, if you don't know, I got your back boy. Oh, press release, news catalyst during the pre-market. Um, yeah, but what press release drop? They're dropping the press release. Oh, I see. Gurus are the gatekeepers to what stocks are really going to spike off the initial press release drop. I'm not sure exactly what that means. As well as Sunday morning service. The days are for worse. If I'm paid, I'm hurting in my pocket. She still gotta haul me back, though, that's for sure. No matter what way incurring. Like, okay, so the information coefficient's doing most of the lifting here. Couple wine glasses, lift them up and took them up. Longer drawdown though. So maybe let's try only penalizing it if it goes below 0. Whatever you're going through when you're high. Got your back, boy. Spread floor. 0. Okay, 0.4. Man caught a sentence. Stayed home, waiting on the phone. But I only have 5 basis point cost. They wonder how we do what we do. Panamera, Porsches, me and you. Whoa. Oh, it's because I made it 0. Okay, so this will make it basically 0. I got your back more. So this is close to close. Shouty if you don't know. Even though them chicks be hating on us. Whatever situation, I'm gonna ride. You know now. Hey, Infant Savari. How about sharing the architecture of your trading system? I'm not sharing that. Because then anyone could trade this, and then I'll lose the edge. But, you could watch the live streams. If you watch all the live streams I've done, you'll get exactly what I'm doing. I mean, I've only worked on this project on live streams, so it's all public. But if you want to, take my edge, you have to dig through the live streams. Then at least I'll get some YouTube views. I gotta keep it looking good for you. Keep it looking good for you. Hey, shawty, if you don't know. All right, so open to open's obviously better. It did worse when I implemented the IC scaling, but really there should be like a nice balance of drawdown scalars, of the exposure scalars. So when I'm lowering the exposure, it should be a nice variety of things, and the exposure should often go to 1. So, I mean like a lollipop. And the drawdown now is only half a year. This is very simple. Oh yeah, so what's the cost? Okay, I'm not pushing the price. All in the club. At a separate 30 basis point annual borrow cost on shorts. All right, so I guess when's that gonna finish? Oh, it finished. Whoa. Whoa, drawdown's only 10% now. Oh, but the returns are lower. So information coefficient is dominating. There's a nice spread in there. Volatility never really comes into play. Let me. So obviously there's more green than anything else. So let's lower this green scalar. I see. Call me. What was the drawdown duration? So 244 days, but the max drawdown 50%, it was there for like 1 day. Bottles in the club. Running one of them. You know I like that nuts. Your lovely lady loves. All right, so I want to see how this performs. I mean, I could just do an optimization. Call me. Stop breaking my heart. I don't wanna be another one. Okay, the information coefficient scalar is still dominating. Don't let go to my love. How did this do in recent times? So this is giving a smaller drawdown in recent times. How did it do during COVID? Oh man. So smaller return before, but it dropped from 80% gain. I guess this would be the low to 50% gain, but that was just really, it was like 60% gain. You can't deny. Just don't wanna let go. When they gonna stop breaking my heart? I don't wanna be another one. So maybe I can accept more volatility if the information coefficient and spread are high enough. Oh, let me look. Actually, I forgot. I want to see. Maybe it performs better also if it's using 10 longs and shorts. Then if I cannot use your model, I can invest in your model. Yeah, if I start a hedge fund, but it'll be easy to until it's basically hard to get funded if you it's hard to get funded if you're publishing all of your picks. But my plan is to just put all the picks of the model up, at least for paper trading, and I think once I go live I'll do that too. It'll help me get YouTube viewers. Um, and really, I could make the buys and then post them right after market open. I could post it after I buy it, and then it won't affect my edge at all. Oh, Nana, what's my name? So information coefficient's still dominating. $148 for the drawdown duration, so that's pretty good. Hey boy, I really want to see if you can go downtown with a girl like me. Oh, 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 oh. I really want to see if you can go downtown. So I think I'm going to change this. So portfolios will have way fewer portfolio strategies. But the same models. What's my name? What's my name? Okay, so we don't need these. $2020 optimized. You took the time to figure me out. Two different first principles models. (2016 to 2022). Whoa. So, of course, more stocks makes it more volatile. What the hell? Did I take off the other scalars? Oh, I did. So it's performing better than the earlier ones were performing on 10 stocks, but it's and at the beginning of 2021 it loses all its gains since 2016, so that's not good. And the effective longs has been 4, so or 3.6. So what if I change the number of positions to 4 on each side? All the crazy shit I did tonight, those would be the best memories. Go for the night, that would be the best therapy for me. Tonight, those would be the best memories. Be the best therapy for me. Don't, you could get sued. I could get sued for what? Well, it's not financial advice. It's purely yeah, that's the thing. You say it's not financial advice. This is purely scientific interest. I've been building this model now that it's curious. How does the model perform? (2016 optimized). Okay, so we can take that out. All the crazy shit I did too. Hey, Soulwater. I don't have anything to sue you over. I'm not interested in lawsuits in general. If somebody fucks me over on something, I'll just take the loss. I don't want to deal with court. That sounds like a big pain in the ass. Sounds soul crushing. Memories. I just want to let it go for the night. That would be the best therapy for me. Hey, hey. So here it's more spread out. Information coefficients having less of an effect. Hey, hey. Yeah, yeah. But the exposure shouldn't be bouncing around here. It should be high. So what if I just raise the floor? Or what if I just turn information coefficient scaling off? Just use the spread scaling. And the spread floor we could increase to 0.5. It's getting late, but I don't mind. Alright, so now I need to make the model. So where was I at in Explorers, paper trading models? Hey, hey. Yeah, yeah. Yeah, this should work. Yo, bang, you ready? Yay. Yeah. Yeah. Yay. Yeah. I mean, what do you see when you're looking at me? Oh, whoa. Whoa, whoa. I've been through the pain and the sorrow. The struggle is nothing but love. The above, all the above, all the above. So this looks good, right? Yeah. So I think this should work. Let me try it. Tell me, what do you see when you're looking at me? See me come up from nothing. See me living my dreams. I done suffered a lot. Okay, so the spread is punishing it too much. Look how I rep for the block. Look how I rep for the hood. I get nothing but love now when I come through the hood, getting this fortune and fame. The new Benz is all white collar John McCain. How the hell could you stop me? Why in the world would you try? I go hard forever. That's just how I'm defined. That's just how I was built. You take all of this from me, and I'm still gonna survive. You get truths from me. These rappers gonna lie. I'm a part of these streets till the day that I die. All right, so 4 longs, 4 shorts, 5 days holding, 1 rebalance day, 60-day look back, smooth predictions true, so that looks good. 0.12, false, only spread scaling. Whoa. So spread scaling doesn't look like it works as well as IC scaling. Okay, let me start running the paper trading models real quick. It's harder to love me. Picture you living my life. Okay, so I think that should work. Let's see. If there is a guily criminal, he should make sure that the justice guily good. What does guily mean? This is the ghetto that made me. We're guily. That must be derived from Guile. Oh, guilty. Do you mean guilty? I thought that was a new word I just learned. Yeah, guilty, obviously. If there's a guilty criminal, you should make sure that the Justice Department gets overwhelmed with number of cases, so you should encourage people to sue each other. Yes, that's true. If someone sued you and you know you're guilty, you should drag the case a lot and get people to sue each other so your hearing gets delayed. I don't know. What are you, a lawyer? Is that your legal advice? You sound like a successful lawyer. Everybody knows my name. No more pain, no more suffering. All right, so okay, that's running now. Okay, so we're making the first model, and then let's pull up the Excel again. So I'm not using all of these strategies, so let's just make it the same strategy. So same here. Really, what do you see when you're looking at me. No, I know. I'm just kidding. That sounds like some high-level lawyer shit, though. Optimize 2016 to current. All right, get rid of these two. 2020 optimize, get rid of those. I do want to optimize for 2020 with all scalars. First principles 1, first principles 2. I don't even, but that's fine. 2016 to 2022 optimized all scalars. Get rid of that, and that. Okay, so that's a lot simpler. So now we have 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6, 7, 8. So 48 models instead of like 200. I assume Furpo sues. Oh, you mean if so one of us gets into financial trouble, then you get all your friends together and say, "Hey guys, let's all sue each other." I'm sure people have thought of that before. Fully Barak. So this is 23 underscore slow down to earth. Oh, 2016 optimized. So 23 underscore 2016. What is E and A? Model 23 trained on the past 3 months. I'm confused on what the A. Oh, A for all scalars. So that should be A. But I will never change, and I'm on my way. This one's 25 underscore 2016 underscore A underscore no val. We're making a change. Oh, I defined the features in target. Feels like a long time running. Oh, so this is not implementing Model 23 correctly. I think they say, I think they just throw your case out. They say you're a wacky guy. You're suing someone who doesn't exist. How do they even have a case with that? Okay, so Model 23 is doing training incorrectly. So I need to I created Model 23 by using the filtered walk forward method. This dropped out unimportant features from this dropped out unimportant features from an earlier model and worked quite well. Now I want to train a single model my way. Now I want to train a single model, but I have not built a function for a single model which drops unimportant features from earlier models. How can I do this? You have another fraudulent idea. Are you just full of fraudulent ideas? Alright, so we gotta give it clean analysis and advanced models. Let me in, another chance to be your man. Your friend opens a company with investors' funds, and then you sue that company and win the case. Your friend opens a company with investors' funds, and then you sue that company and win the case. The company closes down, and you share the profit with your friend. Well, I mean that's one thing you could do. Yeah, but I feel like they would catch on, don't you think? The birds, of course it is. What you say? Oh, would you wanna been where? Well, of course you didn't. What you say? What you say? What you say? What did she say? Um. All right. So the model's not training correctly. Um. I need to explore the portfolio strategy a little bit more, but not too much. I know I should have treated you better. Me and you were meant to be together. I mean, this looks really good. So I'm gonna roll with this for at least one of. This will be the primary first principles strategy. Okay, I'm gonna go to the bathroom really quick. I'll be right back. Just say that you wanna be well. Even for one time. Yeah, it's a one-time thing. All right, you do that, Furpo. Oh no, you're not Furpo. That's Soul Water. You do that, Soul Water. Danser le soir s'embrasser dans le noir, l'Alabama. L'Alabama. I don't get this. Fais son apparition. Regardez les étoiles, croyons sur tous les toits. Alabama, juste toi et moi. Danser le soir, s'embrasser dans le noir. Alabama. Alabama. Yeah, it is scary. I'm not doing that shit. Do 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 do. Train filtered single model. Universe path, target, features, model folder, keep feature columns. Okay, that's pretty easy then. Keep calls, stats. Elizabeth Holmes did. SBF did it, and Pharma Bro did. Wait. You mean Martin Shkreli did what? I think Shkreli. What did he get in trouble for? I like Martin Shkreli. Have you ever watched his live streams? He's really cool. He gives really good analysis. Touchdown in 86. Noah was the man by the age of 6. What did he get imprisoned for? Oh, securities fraud. I guess you're right. Oh, interesting. Yeah, but the whole drug pricing, I don't really fault him for that. You know, I saw a TV show where he because he didn't go to jail for that. That's what the big controversy was about, was the drug price. But then he went to jail, I guess, for securities fraud. Did you buy the Bloomberg alternative that Shkreli offers? No, but I see him talk about it. But you know, I don't really have much use for a Bloomberg terminal. I don't know what that's gonna do for me. I guess you're not a fan. I don't know. I watched his live streams. Like, it was a couple years ago. When did he get out of jail? Oh, 2022 he was released. Yeah, so I watched his live streams in 22 and 2023. So I don't know. I haven't watched him, I guess, for 3 years. But I mean, he is a financial guy. I mean, at its core, I say don't trust any financial guys. Um, one that got away. All right. So what am I doing? Okay, we need to get this to work. My Johnny Cash, never one without the other. Someone said you had your tattoo removed. Oh, well, yeah, I don't think. I mean, really, we shouldn't hate anyone, should we? What's the use of that? Someone's bad, you just remove yourself, but you don't waste any time hating anybody. That's a big waste of your life. I'm not spending my life hating. Um, all right, so I would make you say. Well, honestly, honestly, I don't even really blame her for that whole thing. The scammers are gonna scam. Um, the scammers are gonna scam. Really, all those people who invested in her company are morons. They don't think from first principles. Whoa. Cause now I pay the price in another life. I would make you say. We keep all our promises, be us against the world. In another life, I would make you stay. Their life, I would make you stay. Alright, so we have features, we have target. With your feet on the sky and your head on the clouds. And did I save this? Yeah. Good to go. Yeah, she's a scammer. SBF is way worse than Elizabeth Holmes, I think. Elizabeth Holmes, she was a scammer, but she should have been caught. Sam Bankman-Fried is a weasel. So I want to use 40 trials to train it. Let's use 50 trials. Need different music. Wait, why am I lucky to be white? What? But not lucky as you're not ultra rich. Because the previous comment. I think your ethnicity matters regarding how severe your punishment is. Well, that's certainly true in America. Also, Americans have what do we have? So we have 320 million people out of 8 billion, not 800 billion. So that's what, 1/8, 1/3 of 1/8, 1/24th. So about 4% of the world population is Americans, but 20% of the world's prisoners are American. So, all right. So let's make Model 25. Oh yeah, that's true. Grass is always greener. And you need a lot of luck to be successful in life. But also, the best way to have a lot of luck is you just work hard and luck pops out. That's what I think. I think if you're not being industrious and applying yourself, then no luck will come your way. So it's kind of a double thing. You need luck, you need to keep a good attitude to get lucky. My light in darkness, so God. Wait, hold up. Test model 25 equals true. Oh, because I'm doing a walk forward. Oh, everything that I have, praise the Lord. Worship Christ with the best of your portions. He's the strength in this train that I run. Every time I look up, I see God's faithfulness. I can't sit here and be still. To the whole world it's him, King of kings, Lord of lords. Yeah, but I really think if you have a good attitude, you'll end up getting lucky. You know, there's different scales of luck. Some people get extremely lucky, some people get kind of lucky, but I know God is the force that picked me up. Man, I'm out of coffee. Time to break down all the prisons. Every man, every woman, there is freedom from addiction. Jesus, you have my soul. Sunday service on a roll. Out of idols, let them go. All my demons, let them know. This a mission, not a show. This is my eternal soul. This my wife. This my life. God given right. Thank you, Jesus won the fight. Get 25, 2026. God is. Oh, yeah. Well, I'll see him tonight, so I'll tell him then. I'll ask if he wants to join when I see him tonight. Wait, hold up. Paper trading models. So what was I changing? Oh, I need to get rid of this. So this one's not filtered though, so I can just put this at the bottom. Oh, so this is going to do two models. Test set empty. Shit. I want to test it. There's much more than chess. In a chess league? Oh. So why is that failing? No, 2020 doesn't matter that it failed though, because it would have ran the second model anyway. So that's gone now. So after the auction for the first season of the tournament with the points, there won't be any other auctions. It'll run the same way like a football club. I don't know anything about football clubs. I have no idea how they run. So what's that mean? Everything that I have, praise the Lord. Split data by dates. All right, so I think that I'm going to let this guy think, and I'm going to end the stream for now. I'll do another stream later. My goal is to be paper trading by Monday, so I've got to build out these models and strategies. So that's my main goal for the weekend. And then once I do that, I'm going to be working on basically making the code infrastructure so that I can run this with ease. The models and the portfolio strategies shouldn't change. So anyway, thanks for watching. That's it for right now. I'll be doing another stream later today, maybe 5. Let's see, it's yeah, I might do another stream in like 4 hours or so. So thanks for watching. Have a good day. Don't forget to subscribe. Don't forget to oh yeah, that's it. Okay. Adios. Have a good one. Thanks for watching. And then once I do that, I'm going to be working on basically making the code infrastructure so that I can run this with ease. The models and the portfolio strategies shouldn't change. So anyway, thanks for watching. That's it for right now. I'll be doing another stream later today, maybe 5.